Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, we have a guest that specializes in proprietary macroeconomics with an emphasis on forensics to find out what's going on. You can put a lot of pieces to a puzzle together to figure out what it is. I'm talking about Rob Kirby of Kirby-Analytics.com. Rob Kirby, thank you for joining us today on USA Watchdog.
Pleasure to be with you, Greg.
Well, let's start with the first little elephant in the room, and that's Austria and news that they all of a sudden have a bug that they want to go take a look at their gold in London. And in the pre-interview, you said, central banks aren't trusting each other anymore. And I said, well, they don't trust the collateral. You said, no, central banks don't trust each other. Explain.
Well, listen, the first country that drew attention to their gold reserves was back a number of years ago. It was when Venezuela asked for the repatriation of their sovereign gold from the Federal Reserve. And then that was followed just a year and a bit later when Germany first asked if they could audit, come and see their gold that is allegedly stored in the basement of the New York Federal Reserve. And they were told no. And then a year subsequent to that, Germany asked for the repatriation of a chunk of their sovereign gold stored in America. And, they were basically told, we'll give you a little bit of it, and it'll take 7 years to give you a little bit of it. So that sort of let's say that put some blood in the water. And now, in light of the sheer volume of printing of money on behalf of America, and I'm going to say the Anglo-American banking axis, other countries now, like Austria, they seem to think that their gold in London, they have reason to want to go and see it, inspect it, and know that it's real and it's there and it hasn't been sold or that nothing's been untoward has been done to it. So yes, we've seen an elevation of concern, and I'm going to say a breakdown. We're seeing fissures, cracks in the trust that years back, 5 years ago, there was no questioning the integrity of the ownership or the custody of sovereign metals stored either at the Bank of England or at the U.S. Federal Reserve, and now we're seeing that countries are questioning and want reassurances. So yeah, there's been a breakdown in trust. Or let's just say that we're seeing evidence of lack of trust, and with countries wanting to be reassured, Austria, Germany, Venezuela. And this is now a distinct pattern, and this is something I would expect we'll see accelerate as time goes along.
What happens if the folks in London say, no? They pull the same thing that the folks at the Federal Reserve, you can't even look at it. Sorry. What happens then?
I would say that there could be some piling on. There could be some other countries that would suddenly become very concerned about the state of their reserves. You see, at some point, Greg, countries around the world have these, foreign reserve accounts where they hold vast amounts of U.S. dollars. And if all it's going to take is one of them to get really spooked, and the cliche is they say that one needs to bolt for the door. And if one bolts for the door, bolting for the door in the case of sovereign reserves would be for a country to just start madly buying gold. And at some point, countries, if they feel that their gold has been compromised, they might want to replace it in a hurry, because all the countries around the world that are holding vast amounts of U.S. dollars in their reserve accounts, I think many of them now have a very good idea that in the end, those dollars aren't going to be worth anything. And, so that raises the inclination for one of them to try and, spend them or use them before they so-called lose them or they become worthless. And I think there's a growing propensity for somebody somewhere to do this.
They would turn their dollars into gold, in effect, especially if they found out their gold wasn't being held in safekeeping.
Well, I call it the elephant through the keyhole trick. When you've got a whole bunch of elephants in an enclosed space, and when something rattles them and the elephants decide to bolt, and you only have a small door, the first elephant that tries to get through the door gets stuck in the door, and then there's just a trampling stampede behind that one elephant, and in effect, nobody gets out. So this is the kind of calamity that I think we could realistically see coming in the not too distant future now.
When they can't just look at their bars. I got this from Nick Barishev, at Bullion Management Group, and he said you got to. It's like a car title. You have to have a chain of custody. You have to have the right bar, the right weight. I mean, tell me about how you would have to audit this gold.
Well, I mean, gold is something that carries with it documentation, and as you alluded to, Nick knows all about the chain of custody, because Bullion Management Group, who I'm actually a sales agent for, they deal in good delivery bars, in segregation. In the vaults. They have a proprietary relationship with Bank of Nova Scotia where they actually sell titles or deeds to specific bars of a specific origin, of a specific weight, and of a specific fineness. And all this, when you're dealing with LBMA, good delivery standard in bullion, physical bullion, these documentations and documents all have to be in proper order. And the bars have to be held within a secure environment to maintain the integrity of that documentation. So there's I think the point that Nick was probably trying to impress upon you, auditing Austria, if they want to audit their gold at the Bank of England, it's not a simple matter of them walking into a vault and counting out 400 bars on a pallet and saying it's all there and they're done. It involves examining bars. It involves examining the serial numbers on the bars, the exact weights, and matching them with a manifest. And then it would also involve spot sampling, basically drilling into the bars and making sure that they are the fineness that they are reputed to be, and that all is in good order there.
And they're
so
not
there's
tungsten.
A little bit to it.
And they're not tungsten.
There's a little bit to it.
What happens? The United States. I've had a guest on recently who said the United States has its 8,000 tons of gold. Jim Rickards, and a lot of people are questioning that. They're questioning whether the United States. I personally think the foreign holdings of gold, Germany's gold, whoever's gold, the somewhat 6,000 tons that the Fed was supposed to be holding in safekeeping, I think that's gone. I think that got sold into the market. I don't have any proof of that, but I think that's gone. But some people think that we still have our gold. It is in America. We weren't stupid enough to sell our gold. What say you?
I don't believe America possesses any substantial amount of gold. America claims to have sovereign holdings of just over 8,000 metric tons. I believe that number is grossly inflated and might be close to zero.
If that got out, if news like that got out, what would happen to the currency? What would happen to the bond market? What would happen to America? If that was confirmed, what would happen?
There would be calamity in the financial markets around the world, Greg. Which is why, if there isn't any, or if substantially that 8,000 metric tons is indeed been compromised and has grown feet and isn't where it's supposed to be, it would certainly qualify as a national secret to keep it that way, a secret. So this is something that this would also explain why the United States has been so dead set against having a proper audit of their sovereign gold reserve, because a proper audit would lay the question very very quickly whether the gold is present or not. But any attempts to have a proper audit of the sovereign U.S. gold reserve have been rebuffed now for quite a number of years.
Well, they could have the gold, but there might be 10 claims per bar. I mean, am I wrong?
No, that's possible too. That's assuming it's there at all. It would be interesting. It would be interesting, Greg, if there's 10 people that believe they have claim on each bar, and there's really no bars there at all.
And I want to get back to this thing which is the most current story, the Austrian situation. So you're telling me that if London, the bankers in London say, we're not even going to let you look at it, sorry, could that cause a panic buying spree in the gold market? Could that happen? I mean, they're going to get an answer sometime. Listen, I think before summer, the next few weeks, right? Could that start a panic gold buying?
Absolutely, it could cause a panic and a rush to buy physical gold. But you see, this isn't something that's really just come out of isolation either. There's a number of dots that I connect that would sort of be precursors to Austria asking to see their gold that is reported to be stored in the Bank of England. In the last month or so, we had the announcement by Deutsche Bank that they were quitting the silver fix in London. And what I find interesting about Deutsche Bank's snap announcement that they were exiting the silver market without even finding a buyer to take their place in the silver market, Deutsche Bank came under the scrutiny of regulators in Germany named BaFin, which is an adjunct of the German Finance Ministry, last fall. And I don't think it's a coincidence that, roughly 4 or 5 months after BaFin and German regulators are placing a whole lot of scrutiny on Deutsche Bank, that in my view, they likely found something very untoward about the dealings specifically in the silver market. And by extension, I would imagine they've probably seen things they don't like in other places, namely Deutsche Bank's derivatives book. Deutsche Bank has, to my knowledge, the biggest derivatives book in the world. It's bigger than J.P. Morgan's.
Yes, and I just want to insert here that you were an international derivatives broker for 15 years in Canada. So this is something that you know about. I left that out in your intro, but you have deep experience, 15 years experience in international derivatives. But go ahead.
Yeah, you see, the derivatives books of these banks, Greg, are largely compromised or are largely composed of OTC derivatives. And OTC derivatives is something that I made my living in for about 11 years consecutively. And these products are what make up the lion's share of Deutsche Bank's 54 plus trillion dollars in notional that they have off balance sheet but on their books. And the 54 trillion euros translates into about $76 trillion in U.S. dollars worth of derivatives.
Stunning.
Which places them about 5+ trillion bigger than J.P. Morgan's book. And my work and research tells me that the vast majority of these OTC derivatives are, in fact, have the U.S. Treasury as the other side of these trades. And I'll tell you something, in a time where countries are starting to not trust other countries and their financial management, like 10 or 15 years ago, having this vast exposure to the U.S. Treasury might have been okay or suitable, but it's not sitting as well these days as it formerly would have been. And you see, I'm linking this back, or I want to attempt to link this back to BaFin started investigating Deutsche Bank with a fine tooth comb and really going through their books in the fall, and we found Deutsche Bank with the snap exit of the silver market. If the same regulator looks at Deutsche Bank's derivatives book, I think they're going to be mortified. And if there's any inclination for German regulators to try and shut down that trade, shut down the OTC swaps that Deutsche Bank is doing with the U.S. Treasury, this could cause some really, really serious reverberations in the interest rate complex and to the dollar. So
could interest rates spike high? And just so people know, OTC, over the counter, and there's no public market. I'm going to give the layman's term. No public market, no guarantees, no standards, no regulation. I guess at least they got to this point. Now there's some regulation, evidently, and when it's too dang late. But that's what OTC. That's what you're talking about. Me to you, over the counter.
Yeah.
No
OTC,
public market.
Yeah. OTC, Greg, means that it's not exchange traded. And effectively, every individual trade is a one-off.
Yeah, no public market between me and you, or between two parties. That's it.
Yes.
No regulation. Yes. Do all you want.
Yes. For the most part, unregulated.
And let me get this straight. And they've got $76 trillion in something with no regulation, no standards, no guarantees. They got $76 trillion. Equivalent of U.S. dollars at Deutsche Bank.
Yes.
Well, what could go wrong?
What could go wrong?
Yeah, I'm being sarcastic.
Yeah, like it's. You see, the numbers are just so big. We're looking at U.S. GDP is 15 trillion. German GDP is 5 or 6 trillion. I mean, it's like the numbers. No, it's not even that big. It's I think it's 4 trillion. I mean, I think it's around 4 trillion is German GDP. So you've got one bank in Germany that's got a derivatives book that's 20 times the size of German GDP. I mean, this just doesn't make sense. It's not good business. And you see, German regulators have a thing because German people remember the Weimar experience. Germany has experience in seeing their currency go to zero. Germans know this can happen because it's happened to them. And Americans don't think this can happen. And Americans think they can print money, and they're acting like they can print money until the cows come home, and that they can control anything by printing more money. And Greg, fundamentally, you can't solve a problem of indebtedness by continuing to print money. You see, and at some point, you get called when you're trying to masquerade and do these, and perpetrate this kind of a fraud. This is fraud. This is fraud of the highest order. And the people at the top, the people in the central banking community, the people at national treasuries are all complicit in this. And I mean, this is not going to end well. And you and I have talked about this before. I really hope when this ends, it isn't going to be in a big war, because I'll tell you something. These people who've committed this fraud are very committed to what they do. And, there's a lot of people that I know and whose opinions I respect and appreciate, who think these guys might just flip over all the tables, like when they're ultimately called on their bluffs, because they're bluffing. But you see, what they're doing is they're bluffing with the future of humanity, and they're bluffing with the future of mankind. And this is not a good thing. So,
go ahead. I'm sorry. Go ahead. Finish. So
no, it's vital. It's vital that we start to shine some light on this and try to deal with it, because allowing this to continue isn't going to make the result better. It's going to make the result worse, and it's going to put us in a spot where we ultimately we're going to get to a place, Greg, where we have no more choices. We're not going to have choices, and it will blow up. And then it might blow up in a way that's disadvantageous to the very most, or the biggest percentage of people. So it's high time that we start to get a grip on this and get some transparency into what's really going on here. I think the German regulator BaFin is on that road right now, Greg, because I think they know that by letting this go indefinitely, it's going to be worse. And I think that's why we're seeing them start to put the clamps on Deutsche Bank. I think it was BaFin's investigation that was behind Deutsche Bank exiting the silver market. And I could see them exiting other markets or being reined in other markets as a result. That could and very likely would cause severe dislocations in the financial world, like extreme dislocations.
You were talking about soon.
Yes.
You're talking about them getting out of the silver market as a signal that this could blow up soon.
Yes, very much so.
And why could it blow up? And you're saying that are you predicting that this summer maybe the derivative market might explode?
It could. Listen, putting a date on horrific events is no game for anybody to really get involved in. But I'll just say we are seeing signs. We are seeing cracks in the foundation of this fraud. We are seeing people who have been party to it are starting to have second thoughts, and we are seeing some actions on the part of regulators that sure look like people are saying, you know what, we're not going to allow this to continue. So, the signs are there, and in terms of what exactly tips the whole thing over, Greg, I liken it to a performer on stage who's spinning plates. And if he's got 35 or 40 plates spinning, and we've all seen this on TV in the past. I mean, how long can somebody keep 40 plates spinning and not allow one of them to fall over? But I mean, this is the kind of high stakes craziness that's going on in our international financial markets right now. Our capital markets are hallucinogenic. They are being run by madmen, and it's the spinning plates, and boy, one of them's going to fall over once, and once one of them goes, they're all going to go. So I wish I could be more optimistic in my outlook, but I'm being realistic, I believe.
So anybody holding gold or silver, I get a lot of people saying, well, I was told to hold silver at 30, or somebody wrote me and said, one of my guests said buy gold at 1,600, now it's 1,300, which tells me that they don't really understand the enormity of what's $300. Do you have it or not?
Let's restate what the purpose of holding gold and silver is. Gold and silver is a life insurance policy. And on a life insurance policy, you don't collect until your beneficiaries don't collect until you die. And with gold and silver is your life insurance policy, and it isn't going to come into its own until this current system breaks. And you know what? We're close to this current system, I believe. I think we're close to this current system breaking. And so, we talked about the extremeness of what can happen, the unthinkableness of what can happen when this thing finally breaks. That's when you want to hold your gold and silver, because that's when you won't be able to buy it. And that's when it will have all the value. That's when the policy pays. So, getting strung up or worried about the machinations of the daily grind and slaughter by officialdom of the metals prices on their crooked exchanges is really a fool's game. And when I say that, one caveat: if anybody is silly enough to be playing these metals with leverage, that's the only way you can get choked out of your ownership. And people need to start thinking or getting a feeling for thinking about wealth being expressed in ounces, not in dollars, not in euros. Because you know what? whether it's kicking or screaming, we're going back to some sort of we're going to be forced back onto some sort of a system of honest commerce with honest money. And that basically implies something asset-backed or basically barter. And when you're talking about asset-backed or barter, you're talking about a metal standard of some description, whether you like it or not. And we're going there even if it's kicking and screaming. And because the people running the current system have absolutely destroyed it. And it can only end one way. So, look at your precious metals holdings.
One way is it's going to collapse.
Yes. And, another way to look at your metals, it's a lifeboat. We're on a ship. That ship has hit an iceberg. We've hit the iceberg already. That ship's going down, and you want to have a lifeboat. So your metals are your lifeboat or your insurance policy. You can view it any way you want. It's vital that people get this into their heads and buy it and own it as what it is. Not as a speculation. It's real wealth, and think about it in terms of ounces.
Are you worried about them being so psychopathic, the leaders, the people that got us here, so crazy? They must know that we've hit an iceberg, right? They do know that the system's in trouble, correct?
Absolutely, they do.
So could they just, to your phrase, turn the table over and start a huge war? Just start nuking people? Just start shooting to cover this up?
I wouldn't put it past.
Are you worried about that?
I'm very worried about that.
That they could just start a war and say, hey, look, it was Russia or China or these terrorists or whatever that caused the system to implode. It wasn't us.
Yeah, well, I mean, look, Greg, the term false flag certainly shouldn't be an unknown term to the people who'd be watching this or listening to this broadcast. And our leadership, I would suggest to anybody, has a propensity and has a history of employing false flags, so to cause mucky muck, so they can blame it on somebody else. Their bogeyman du jour.
Do you think we make it out of 2014 without are we going to have a non-delivery event in gold coming up? I mean, if they won't let people audit their gold, if they won't let people, I suspect London's not going to open their vault to let Austria in to audit their gold. Are we going to have some type of pivot, some big event this year in terms of the gold and silver markets, in terms of the confidence being lost? I mean, that's what we're really talking about, not inflation. We're talking about confidence in the system. Are we going to have some kind of an event in 2014?
I smell that odor very pungently in the air right now, Greg.
And there's only one place for it to really go in terms of dollars, but to your point, it's not how many dollars, whether it's 13 or 16 or 18, it's do you have ounces or not?
That's right.
Do you have land? Do you have ounces? Do you own your house? Do you have a car? Is that what you're talking about?
Listen, Greg, when currencies collapse, I mean, look, we saw it in Zimbabwe, where they were printing $100 trillion notes. If you had 6 of those notes, or 600 trillion Zimbabwean dollars, you could buy 3 eggs at one point. And I mean, if you look at the history of the Zimbabwe dollar, which was the Rhodesian dollar before, I mean, 25 years ago, that was worth 50 cents US. And I mean, currencies can and do, fiat currencies can and do usually all go to their intrinsic value, which is 0. This is what happened in Weimar Germany. It's happened in many South American countries over the last 15 or 20 years. It's happened in Eastern European countries. And I'll just tell you something. The way America is currently printing dollars, it's a good bet to occur here too.
Dollar, you think, is going to ultimately go to 0?
Absolutely, it will.
Rob Kirby, KirbyAnalytics.com. Thank you for joining us today from Canada. Thank you very much for shedding some light on what's going on.
My pleasure, Greg.